Okay, guys, welcome. SmartHelping.com here. I'm Jay, and I have an update for the lending model. It's not a major update to any of the loan configuration or all the logic regarding the credit facility and how that works. The main updates are around what is wrapped around the template, how equity is contributed, cash flow statements, some stuff on the balance sheet, a little bit of well, I'll just go through each update. So the first thing you'll see that's different on the latest is there's no required equity here. Instead, you'll just see investor proceeds and or owner proceeds, which are derived from this percentage right here. So if you change this 60% or 80%, the reciprocal will go to the contribution rate of the owners. And you could do 0, 100, that's fine too, if it's all just one owner committing all of the capital, whatever the case may be. That will just define of all the negative cash flows in all periods. This is the contribution that investors will contribute, and this is owner contributions. So it's a very simple way to look at the model. You'll see this 1.3 million right here is actually just the sum of all the negative cash flows that happen over the course of 120 months. And what I mean by cash flow is that's basically after all the operations, after all the lending activity, debt service, every single possible thing that can happen, there's a final cash flow here. And that, if it's positive, it will be a distribution. If it's negative, it'll be a contribution requirement. And they're summed up across the model. The main place that you'll see is the logic here in 28 shows any negative cash flows happening, and that'll come in here as equity contributed. That'll show as equity on the balance sheet, investors and owners, just depending on those percentages over time, and it accumulates. So that's the first update. It's way cleaner. The next thing I did is I added, so before the model just kind of ended showing cash being used to repay any like outstanding credit facility amounts or debt, but it wasn't showing the cash coming in on the balance sheet. So like you would see this cash number would be negative, but you'd have a big loan receivable on all the loans you've originated. This is the total opening balance. So the new update is this goes to 0 if you are doing an exit value, and then the cash will come in here. Now, if you don't want to show an exit value, you can always hit NA on here, and then you'll see this just goes forward. There's still loans receivable here. You'll still have the credit facility outstanding here, so none of this is getting repaid, and it just shows you whatever the balance is at the last period. And you could also do an earlier period. Let's say you wanted to run it for 9 years instead of 10 or whatever year. You can adjust that here, and then you'll just zero out. If you're not including the exit value, you just hit no on repay any facilities, and you'll hit 0 on exit multiple of the loan, and then you can see on the balance sheet now the last period is end of period year 9, and here's all the balances accordingly. Now, if you were going to include the exit, this is the other update is the multiple of net assets. So this is all your loans receivable that you're going to receive. You also hit yes here. And let's put this back to the last period. And now it'll show that zeroed out. Here's the cash, the net cash. You're repaying this credit facility, and you're all balanced. You could have a gain. Let's say you sold it for more than the book value, essentially. Well, in that case, once these get zeroed out, that net gain will come over to the income statement. You can see here we've got a gain or loss on sale of the loans based on what you were owed versus what you sold them for. So that difference will go in here, and that's new logic that I think is helpful to show this properly. What else is there? The loan configurations all work the same. Costs all work the same. The CapEx, actually, there was no capital asset row on the balance sheet for this. So I added this row for capital assets, and this is just going to be an aggregate of any numbers you put in here for one-time expenditures. And before that was just going, it was counting on the monthly detail as cash out, but it was not going, and it was going to the cash flow statement, but it wasn't going to the balance sheet. So now it does, and it's fully functional. This is all fine. This all works the same. This kind of cash flow analysis is all the same. Executive summary is the same. And visuals, I believe that's everything. That's different. And so I deprecated a few things. So on the cash flow statement, there was a supplemental schedule down here that was trying to show dividends and if you want to release, pay dividends out, and it was trying to look at the balance sheet from the perspective of the company only. I have used this sheet with maybe 5 or 6 different clients who actually wanted to work with it, and none of them use that, and I don't think it's that useful. So I removed that and just made the cash flow statement essentially everything that happens from the perspective of the owners of the equity. And so any positive amounts are distributed, any negative amounts are contributed, and then when the sale actually happens, we're just looking at like what that looks like for whoever owns the equity. So that makes everything a lot more a lot easier to follow. It's smoother and there's less errors on use cases. The debt, I don't. So before, if you were to put like a 5-year period on this debt, it would cause an error in the balance sheet because these were going to blank instead of zero. But now they don't cause an error, so you could have a loan, a long-term loan, maybe to fund startup costs or some of the burn. It now you can see there's no error. It just shows a balance, and then when it's zero, it's zero. So that was an improvement. Put this back to 30 years. And again, this will also assume to be fully repaid on the end month, whatever that might be. So there was logic to update that. If you look at the cash flow, it's included in this principal repayment. If we look at it here, in the last period, here's the amount of debt repayment, and that's flowing through everywhere accordingly. And then the balance sheet will go to zero for that as well in the last period. So it's all taken care of. Everything balances. So a lot of just edge case updates I did. So this model is a lot harder to break now. It's also easier to fill out and understand what's happening. I'm happy with it. If you've already purchased it in the past, you can just ping me and I'll send you the latest version, no charge. Let's see, anything else? Oh, that's good. All right. Well, that's all I got for you, and I'll see you guys on the next one. You can get the template at smarthelping.com under the lending bundle at the top. You'll see a tab at the top saying lending. It'll also be a link in the description box below to get to it. And check out more things at smarthelping.com. The full bundle, you can buy everything I've ever built on the whole site, over 120 financial models for $9.99. So be sure to check that out as well.